welcome to the Master Investor 2020 Avation PLC Investor Presentation. I thank you for your time. My name is Richard Wolanski and I'm the Finance Director of Avation. Avation is an aircraft leasing company, so quite simply we purchase aircraft and put them on long-term leases with airlines. Avation has been listed for 15 years and prior to the pandemic had a continuous history of high growth, increasing dividends and high shareholder returns through long-term share price growth. The purpose of this presentation is to provide you with an update and to ask you to consider the business now that there is light at the end of the pandemic tunnel. The share price has suffered since the pandemic, going from £3.40 last Christmas to a low of 85p in the last month. With various announcements of pending vaccines, this sector, along with airlines and other transport and holiday sector companies, have turned the corner and the stock has lifted to around £1.50 today. Avation has a similar fleet to what it had 12 months ago, and with the long-term leases attached to the aircraft, the fundamental question for investors then is how and will the share price return to the sorts of values that it has seen in the past. The purpose of our presence at Master Investor is through this presentation and other links and documents in the virtual booth is to provide investors with information that will enable them to form an opinion of the opportunity the company has moving forward. Investors will need to decide for themselves as to what the world will look like if and when a vaccine is rolled out. And clearly this is the key to the short-term future of this company. But if you believe that a vaccine will be found and successfully rolled out, and there's already evidence that consumers will desire to return to travel, which will allow Avation to return to its pre-COVID strategy of growth to deliver increased shareholder returns, which should see the company return to previous valuations. At the end of this presentation, I'll provide investors with some specific buying signals from a macro and a micro perspective that are likely to positively impact Avation. This could provide insights into what is likely to drive the share price in the short term. I would encourage investors to look at the links in the Master Investor virtual booth and to other recent presentations, most importantly, which is the recent financial year 2020 full year results presentation dated 23 October, in which we set out full financial results, which were very strong in what has been the worst year for aircraft leasing in the industry's 50-year history, and details of the COVID-19 strategy we've successfully implemented to provide support for our airline customers. So I will not spend too much time on these issues as the recent presentation provides up-to-date information and can be accessed through the Master Investor virtual booth. As I am in the Singapore time zone, I'll only be available for online chats between 7:30 a.m. and 11 a.m. on each day of Master Investor. But I would also encourage investors with any questions to contact me directly at richard.w@avation.net. Here's the standard legal disclaimer, and now on with the presentation. Avation has 46 aircraft in the fleet at the date of Master Investor conference. The fleet and customer base is diversified with 19 customers in 15 different countries, and the fleet is dominated by narrow-body and turboprop aircraft, which service the regional and domestic routes that have been the first to return to flying as we come out of the pandemic. The fleet metrics are amongst the best in the industry, with the weighted average age of the fleet at a very young 4.1 years old, considering aircraft tend to be used for about 25 years, and the average lease, which are at fixed rates per month, still having 6.9 years to run. The value of our fleet as per our audited accounts at 30 June was $1.24 billion, from which we were able to generate over $136 million in leasing income, which was a record for the company in its history. The current fleet has over $862 million in unearned revenues to collect from the existing leases that are running on average for 6.9 years. And partly due to the support that Avation has provided our customers, are returning to flying now, with more than half our customers now flying at above 50% of pre-COVID levels. And in what is a promising sign, these customers make up more than 60% of that unearned contracted lease revenue figure. So we have a high level of confidence about our contracted revenue and collecting that over the remaining terms of those leases. And as we are effectively seeing our customers flying more and more each week. Avation has been able to weather the pandemic storm so far due to a number of key factors that I will now touch on, that has meant that the crisis has had less impact on the company and its airline customers. The first of these is the fact that our fleet is heavily weighted towards regional and domestic travel, with over 82% of the fleet suited for these purposes. Around the world, as countries pass through the peak of the virus, it is regional and domestic travel that is returning to service before the international routes. The company has retained a full complement of commercial, legal, financial and technical personnel during the pandemic to ensure that it has the skill set needed to manage the lessor platform and also take opportunities in the post-COVID-19 recovery phase. Since the beginning of the COVID-19 pandemic, we have continued to do business. Avation has successfully completed 12 aircraft transitions, including lease extensions, aircraft sales, and new lease transactions. The final 2 Fokker aircraft, Fokker 100 aircraft, were sold off at the end of their leases. The sale of these last 2 aircraft was completed just recently in September 2020. As of today, the company's fleet no longer includes these Fokker 100 aircraft, which were part of our fleet for so many years. It's important to note as well that we have 6 orders and 25 options for ATR aircraft that will represent a growth path for Avation in the future. The second factor that has supported Avation and its success through the COVID period is the fact that Avation's customers are concentrated in countries that have only had minor impacts from the pandemic. Avation's customers include 7 flag carriers, and while flag carriers are not excluded from the impacts of the virus and associated travel restrictions, these airlines are most likely to generate some government support where it is offered, and highlights the importance of the national carriers. These airlines are also likely to have a much higher proportion of domestic and regional routes in their respective countries. And these, as I said, are the routes that are returning first. So these airlines are the ones that can generate income sooner and retain flying and return to profits sooner than others. Around 2/3 of Avation customers by revenue are located in Asia, and includes countries that only had minor impacts or are towards the end of the impacts of the virus, including Taiwan and Vietnam. We've also been fortunate in Europe, where our largest customer, Air Baltic, has been able to operate at high levels and receive further government backing during the time of the pandemic. Avation's strategy for COVID-19 is about maintaining liquidity and cash flow. Avation took a pragmatic approach, focusing on preserving cash flow as airline customers suffered a major disruption. Avation was a first mover in working with our airline customers to help them through this difficult environment. This involves supporting the airlines by allowing a deferment of a portion of their monthly rent. This is not a rent decrease or a rent holiday. Airlines have to repay the deferred rent, and typically they have started repaying some of this rent by calendar year, end of calendar year 2020. To balance this reduction in cash flow, Avation implemented 3 key strategies to preserve and maintain the cash flow. The first has been with the assistance of key lending banks, adjusting the amortisation of senior debt associated with the fleet. The second has been to reduce expenses through lowering of SG&A. While we are targeting a broad lowering of costs, specific actions include the elimination of employee cash bonuses while the pandemic persists. And the third step has been to reduce capital outgoings. This includes capital expenditure moratorium in the calendar year 2020, with no new deliveries of aircraft into the fleet. We have made agreements with 14 of the 18 customers we had at the time. We've since added a new customer to the fleet. And typically, Avation provided 3 to 6 month deferrals of a portion of monthly rents with 6 to 9 months repayment periods. We are continuing our dialogues with the airlines, which are recovering obviously at different rates around the world, depending on the rates of infection and government regulation regarding flying. Airlines are required to continue to pay maintenance reserves as part of the deferral agreement, and the total rent deferred by airlines is only about $13.1 million, or less than 10% of our annual revenue. Avation is monitoring its airline customers and continues to work closely with them, as some are recovering at slower rates than others. Avation has been successful at mitigating the impact of lower rents on cash flows by agreeing to reschedule more than $24.4 million in loan amortisations. And investors should note that the impact of the virus continues around the world today, and there'll be further work and further cooperation needed with our customers before we come out the end of the pandemic. Now, a word on Virgin Australia, which was a large customer of Avation prior to entering administration directly as a result of the pandemic. Avation had 13 aircraft with Virgin and has already transitioned 5 aircraft to new homes. Furthermore, we were very fortunate that the leases to Virgin Australia were mature, with a range of only 1 to 3 years remaining on the duration of each lease. The uncontracted revenue associated with Virgin Australia represented less than 6% of Avation's total unearned contracted lease revenue across all the customers. So Virgin would only have a very small impact on Avation moving forward. Because we match the debt on aircraft with the lease term, most of these aircraft are virtually paid off, and the relatively low levels of debt associated with all of these returned aircraft will be further reduced by the payment from Virgin Australia's Creditors Fund, which we should receive by the end of June 2021. I'll now move on to the buying signals I mentioned at the beginning of the presentation, things that investors should look for to drive Avation's opportunity in the short term, because, as I said, our sector has been very hard hit, and most people are scared of this sector. So as we see light at the end of the tunnel and coming towards the end, what should you look out for? The first of these, which has obviously already occurred in the last 2 weeks, is the announcement of various vaccines that are likely to see global rollout and vaccinations that will open borders and allow airlines to get back to normal. It is no surprise that Avation's share price has moved up to £1.50 in the past 3 weeks on this news, but there is still a long way to go, and there are many steps which will provide increased confidence and shorten the pathway to return to normal business for airlines and aircraft leasing. Fortunately, many of these may either be only weeks or months away, so it is a time for some optimism. Over the next few weeks and months, some vaccines will receive the all-important approval from federal drug administrations for rollout. These are key gateways to ending the pandemic and will be all very public information for investors. The third, key buying signal is the rollout of vaccines in various countries that will enable airlines to plan to return to normal flying and start selling tickets. You will then see airlines advertising and selling tickets and start flying at increased levels, even though they've already started that process now. And lastly, over the next 6 months, there will be ongoing announcements of government stimulus that is likely to positively impact travelling consumers and our airline customers. Moving on to more micro issues or Avation-specific issues that we expect to be able to advise investors on over the next few weeks and months are the following key issues. Avation's got 8 aircraft from Virgin Australia to place to new customers or sell after having placed or sold the first 5 of the 13 aircraft that we had at Virgin. These aircraft are coming out of maintenance at a rate of about 1 per month, and we seem to be placing these at about the same rates. Monetising these aircraft or transitioning these aircraft, which are currently not earning rent, is a very positive step forward, and we will continue to announce as each of these aircraft is dealt with over the next few months. Secondly, will be the continuing news that Avation's airline customers are returning to flying at levels approaching pre-COVID, which we will continue to track and is already heading in the right direction, and we'll continue to notify investors on. Some airlines are still struggling, and as we finalise or no longer have to provide assistance to customers, and they start or finish paying back the assistance we have provided, we'll also keep investors notified as these eventualities play out. And as notified in our 23 October financial year results, we advise that we're seeking to extend the duration of our May 2021 unsecured bonds at a time when the high yield debt markets are dislocated. We expect to be able to provide investors with more information on this in the coming weeks. So it's a short-term announcement for investors to look out for. And finally, In 2021, we expect to halt the temporary moratorium on capital expenditure and be able to return to growth, which has been the overriding characteristic of Avation over the past 15 years. Announcements of growth that will lead to growth in revenues and earnings have historically driven Avation's share price higher. For the final slide, I'd like to provide a view on what the opportunity looks for Avation in a post-pandemic world. Avation implemented a plan to get through the pandemic and has worked well with airline customers and banks and built a lot of goodwill and strengthened relationships by doing so. Thousands of aircraft have been retired over the past year, and there's forecast to be a shortage of capacity as airlines and travel tries to return to normal. And it'll take months, even more than a year to 2 years to return to normal. The capacity shortage is likely to take a couple of years to rectify, meaning that aircraft will be in short supply. You just have to think about how long it'll take Boeing to deliver the nearly 500 737 MAXs that were grounded pre-COVID. This will be positive for lease rates and the leasing business model. Furthermore, the company believes that airlines will require significant numbers of leased aircraft in the post-pandemic phase due to the vast number of older aircraft that were retired. And also the impact on airline balance sheets. All airlines have suffered because of this, and it's reduced their ability to directly purchase aircraft themselves. This supports Avation's strategy of being focused on new and popular aircraft types, as these airlines will reach out to lessors to do increased levels of leasing. These aircraft will be delivered in a low interest rate environment and where the main expense of a company like Avation is interest expense from borrowing. So borrowing costs should go down based on an interest rate percentage perspective, which is likely to enhance the bottom line for aircraft lessors like Avation. And finally, due to the financial turmoil, there is likely to be a number of opportunities to buy aircraft from airlines for those out there with the balance sheets and funding to do so. This concludes what is a short presentation. I hope that I've provided investors with some tools with which to view the opportunity in Avation over the very short term. Again, I'll be available between 7:30 a.m. and 11 a.m. over the 2 days of Master Investor. Otherwise, please send your inquiries to richard.w@avation.net. I also encourage investors to look at the other tabs in the Master Investor virtual booth, which will provide links to further and more detailed information on the company. I wish you all the best for a safe Christmas and a prosperous 2021.